So if the handbook says I can or I can't, that's what I do. If it's kind of vague or it lets me have some guidance on what I choose to do, I'm going to lean into where I can to make sure that I am doing something that ultimately is a benefit to the VA buyer. All right, so let's talk a little bit about our VA loans, right? I think this is the most powerful loan program available. If I had to pick a loan to do forever, it would be the VA home loan. There are so many different ways to help a VA buyer get the money they need to buy the homes they want. It's just amazing the way that the file can be structured in order to help somebody. And that's ultimately what the VA home loan is supposed to be. It's supposed to be a benefit to the VA buyer. So we're gonna talk about things, we'll call it a masterclass, kind of teach y'all everything you need to know, right, about the VA home loan benefit. So at GFS Home Loans, we are the lender. We are an extension of VA. So essentially, whatever VA allows, we're gonna allow. So if the handbook says I can or I can't, that's what I do. If it's kind of vague or it lets me have some guidance on what I choose to do, I'm gonna lean into where I can to make sure that I am doing something that ultimately is a benefit to the VA buyer. So some popular myths here, some VA loan myths that I literally see cost homebuyers thousands of dollars, right? There's a lot of misinformation, and two of the big ones are gonna be credit score. I see VA buyers get told no, they can't use a VA home loan because their credit score is below 680 or below 620 or below 600. You know, the truth is there is no minimum credit score at all. So if somebody tells you that there's a minimum credit score, they are inaccurate. They've got bad information, probably because the lender that they know has overlays and they don't allow it. Another one is like debt to income ratios, where people say, oh no, I can't do it because my debt to income ratio is too high. So if you don't know, debt to income is just a simple calculation. It literally is, what's the debts on my credit report? You know, car loans and credit cards, maybe student loans and childcare. That's one of the things VA includes. Like, what are all those expenses divided by my gross income? You know, and so if that number is above 41%, VA does have some additional guidelines that we have to follow. But if it's over 50%, so if it's over 55, I don't care. You know, if it's over 60, 65, I did a loan last year, 73% debt to income ratio. And I don't say that to brag. I'm just saying that if you understand the VA home loan benefit, you can structure the file to where it makes sense and you're not harming the VA buyer. So there is no such thing as a debt to income ratio maximum. Now, I will say if you are pushing 50, 55, where the majority, over half of your income is being used for expenses, you need to be looking at that saying, okay, am I really doing this VA buyer a benefit, or am I going to put them in harm's way? So usually there's other compensating factors in the file, like you already pay rent or you have a housing obligation very similar to what your proposed mortgage payment is going to be. Maybe there's additional income that we're not using to qualify that is there, but it's not eligible for repayment income. Maybe there's significant income or other significant money in the bank as reserves. You know, that could be a compensating factor. Like, there's a lot of different things that we can use to help frame the narrative that this is a good idea for the VA buyer. So just be careful. No minimum credit score, no debt to income ratio. You can use your VA home loan as many times as you want. And in fact, I think a lot of VA buyers don't understand that they can use what's called bonus entitlement. So every year the conforming loan limit changes. Right now it's at about $832,750. So VA basically says, all right, if you've already used your VA home loan benefit before and you still own that property, or maybe that loan didn't go well in years past and there was a claim because it went to foreclosure, that entitlement is used up. You don't have access to it anymore. Well, you can still use your VA home loan benefit. You can go get another house. So for example, let's say you bought a $300,000 house, you know, a few years ago, and that loan has an amazing interest rate and you don't want to let go of it. You would rather turn it into a rental property and let somebody else finish paying off the mortgage, but you still want to go buy another property and you're wanting to use your VA home loan benefit. You can do it. You can do it. You just got to use your bonus entitlement. So you've already got $300,000 spent. Quick little math says $832,750 minus 300 gives you a little over 500 grand worth of purchasing power. So you could literally go buy another house, another $500,000 house, with no down payment, and VA would guarantee it. And you could use rental income from your vacating primary if you needed to help offset that payment. And you could buy a house with no money down. You can negotiate for the seller to cover all of your closing costs. In a perfect situation, which I think you could, in today's market, you could acquire that property with very little to no money out of pocket, which is really cool. So bonus entitlement is a big piece, and I don't think enough VA buyers understand that they can use their entitlement more than once. You can do it 2, 3, 4 times. As long as you have eligibility left in your entitlement, you can use your VA home loan benefit again, for sure. A cool thing for VA people, especially when they're PCSing, is to get ahead, right? Talk to a lender who's going to help you get the money you need. So when you get to town, you already have a property already lined up and everything for you to move into. And what I find most times is a lot of the VA buyers like to make their mortgage payment, with insurance and taxes and principal and interest, sit inside their BAH. And that's normally a pretty affordable number because the government is going to give you money for your housing depending upon the location and if you have any dependents and stuff. But getting in front of the lender, making sure you're doing it in cadence with them, making sure that those orders are already cut, that's a big piece. Like if you're going to move from, let's say, California to Texas, and you're in the military and you want to move to Texas, you're going to have orders cut, and you're going to need to be able to report to the base that you're going to be stationed to and be able to within 60 days of closing. So you technically can still be in California and buying the house here in San Antonio. We just need those orders to prove that you're going to be coming to San Antonio, so in order to be able to occupy the property. There are some other situations where maybe a spouse or a dependent child could satisfy the occupancy, right? If something was going to delay you being able to occupy the home, but just PCSing, not going to be a problem. Just make sure those orders are cut and everything should work out great. The biggest way that I help my VA buyers get their offers accepted is by calling the listing agent. I think VA loans do have a little bit of a stigma attached to them just because the market doesn't understand about the fee structure. They think that the seller just automatically is going to have to pay a bunch of fees because the VA buyer is not allowed to pay. There's some uncertainty around what defines VA non-allowables or what makes a fee non-allowable for a VA loan. But most of the time, we don't have any VA non-allowable fees. If the sales price is $250,000 or more, pretty much all of the fees that would be charged are eligible for the VA buyer to pay. So I explained to the listing agent, I was like, look, your seller is not going to incur any additional expenses because the VA buyer chose to go VA. And in fact, your seller is protected because the VA has so many amazing ways to help keep a deal together for the VA buyer. That would be the loan program to use in case there was situations during the processing or the underwriting that kind of changed or moved a little bit during the process. But the property is the biggest, piece that the sellers need to be mindful of, that the value of the home really needs to be supported. So the comparables are important. VA is not going to mess around on the value. This is a 100% financing loan. So if VA is trying to guarantee $300,000, they want to make sure that that property is worth $300,000. So they're going to draw a circle literally around the subject property, and they're going to use the comparables that have sold most recently in proximity to the subject property. They're not going to step over a comparable, or they're not going to go farther out. They're not going to leave the neighborhood just to try to make that sales price hit the value. They're going to make sure that that value is supported. And in fact, they'll give us a 48-hour window. So when the appraiser goes out there and they're doing their homework and they're reviewing the property, they're going to come back and tell us, hey guys, I'm going to issue what's called Tidewater. I'm going to let y'all know that I think the report's going to come in short or low in value. Why don't you help me give me all of the comparables that you have that help supports it? VA is the only loan program that does that. Every other loan program just gives you the report. That's your value. You can deal with it. VA actually gives you some time to help them come up with a number that you thought was fair and customary, that you thought the market should support. And the other thing too is like the property can't be in need of repair. So if it has peeling paint, or it's got a broken window, or it's got an electrical outlet that's exposed, or it's got things like VA is looking for soundness, structural, safety, health. There really can't be anything wrong with the house. And that's just the other thing that we just teach them. A good listing agent's going to know that VA is going to be particular, because VA doesn't want the VA buyer, to incur any additional expenses when they take ownership. And then of course, if it's 100% financing, VA doesn't want anything to be wrong, because the worst case is this loan doesn't perform, and then the loan goes into foreclosure, and then now the VA is trying to sell this property and it's in need of repair, right? So there's not normally an issue once I talk to the listing agent and I explain to them the structure of the VA loan and how it's a benefit to the seller as long as the VA buyer, and that's how we can help you get your VA offers accepted, just with a little bit of education and information with the listing agent. All right, I get this asked a lot, is VA loans better than conventional? So sometimes VA buyers do have some money that they want to put down, and they're looking at the differences between the two loan programs. Do I put 20% down on a conventional? Do I put 20% down on a VA? It's a valid question. And pretty much every time, especially when the VA buyer is in receipt of VA benefits, meaning they're not going to pay a VA funding fee, I lean towards the VA. VA loans typically have better interest rates because they're a government insured loan. Plus you have the protection of VA long-term because it is a VA loan. If you went the conventional route, yes, you could waive your escrows, right? If you were to put 20% down. Conventional is a little bit different market. So if we were concerned about the condition of the home, conventional has a little bit more, I don't want to say lenient, but a little bit different guidelines. Like you don't even have to have the utilities turned on for a conventional appraisal. But normally 99 times out of 100, right, I'm going to say go VA. The only route I might say to go conventional is if we were doing a 15-year loan and the rate was low and the VA buyer was not in receipt of VA benefits and maybe they were going to end up paying a subsequent fee. You're still going to have probably a 1.25% VA funding fee. So that would be an additional cost. So we'd have to factor all that stuff into it. But if you like this information, if you want to learn more about VA, I'm a VA expert. San Antonio has a really big community of VA buyers. So be sure and like and subscribe and tune in more for some great VA home loan benefit.